Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, all. Ira Epstein of Linn Associates, and we're not quite at our close yet. On Monday, the 22nd of October, 2018, we're in the 345 zone. And as you can see, the market's going to probably finish, in fact, it is going to finish off with the Russell lower, the Dow lower, and the S&P. I already saw the 315 time zone when I was looking at the metals. It's not surprising to me. There's so much weighing on these markets. You've got the Italian crisis with the European Union. And what I mean by that is the Italians are determined to go ahead and spend triple what their brethren in the EU have agreed that they should spend from past governments. And there's going to be fines and challenges on it. Moody's already lowered their credit rating one notch above junk for Italy on Friday. S&P comes out this Friday, and we'll see if they lower it the same way or worse. You heard what I said, or worse, because I don't think the Italians are going to back off. The metal markets, a little bit of a correction via a strong dollar today. We've got Russia and the U.S. tit for tat, as they're going to, are we both going to stay in the nuclear treaty that Reagan and Gorbachev did? Don't know what's happening there. And of course, midterm elections coming up, and nobody knows what that means. So as you look at the stock market, we're still under that break that we've had. You've gone from 29.34 on the weekly chart to this area of 27.55 on the correction, about 200 points. Not quite 10%, but a good sized break overall. When I come in and I look at the Fibonacci retracements from the high to the low, and that's just up here to this most recent low, you got up, did not make the 50% retracement. You got up, as I said, into the high 40s in percentages, and you've broken back down. This pattern is still valid unless this low is taken out. Do we understand that? So I'll be looking at it. What would break the pattern now is obviously getting under here or closing sharply over the 62% correction. When we take a look at the trend, it's down. Lower highs, lower lows. That is the most simplistic way to look at it. What negates the downtrend is if the market came back up over 2,800.50, the last rally high. In terms of the number that the market keeps fighting against, the 200-day average of closes is obviously one of those numbers, and it's well under it on the close today. We still have the market falling apart, if you will, and the Bollinger Band is very, very far down. All this volatility keeps sending it lower. In fact, from where the market's at, it's another almost 57 points away. In terms of market momentum, it is oversold, still pointing down, however, but oversold. In the NASDAQ, it's the 200-day average again that the market's hitting. And when I say the market's playing around it, if I come back to the previous chart right here, it's the fact that it hits it. You can get these swings back and forth, but it keeps hitting it. Notice you just missed hitting the 100-day average on the rally back up, but the market flattening out in terms of momentum. You can see that right through here. The pattern is a higher high, and with today's break, a lower low. So you don't have a trend, but I wouldn't expect one right here unless it was a downtrend, and you don't have that. In the Dow, you have a pattern of lower highs and higher lows. So you're squeezing the market like that. Will the market hit the 200-day average if it breaks further tonight or tomorrow? I think that's the question a lot of people have. What breaks this pattern? Taking out 25,596, otherwise it stays in place. Momentum down, bias down, but oversold. In the Russell, we're still in the bearish pattern of lower highs, lower lows, the momentum in the market. Both numbers, if you'll notice in the slow stochastic today, are under 20. On Friday, they were under 20, but not the day before. To embed, which means converting an oversold condition and locking in a trend, you need another day where they're both under 20 tomorrow. Normally, that doesn't occur. Normally, you get to patterns more like this, like that, and the markets turn away from them. We'll see if that happens tomorrow or not. In the VIX, a narrowing in of a trading range. The pattern has been one of trying to make higher lows with lower highs. Again, I don't see a trend. Momentum has gone flat. The market's waiting to see what next. In the T-bond market, still lower high, lower low, bearish. The market's got momentum pointing slightly down, but down, and the bias down. You negate the downtrend if you take out Friday's high of 138.7. That would put into play, I would think, the 18-day average as a resistance point. Until that occurs, you're still, in my opinion, in the downtrend. Same in the 10-year note. Lower highs, lower lows, momentum sideways to pushing lower, bias down. You'd have to come up here and take out this high of 118.6, the high of Friday, to negate that pattern. And by the way, if you negate it and you close over 118.6, you actually turn the trend up in the market. So these are some key numbers in these markets. TLT, the popular ETF for interest rates, lower highs, lower lows, bearish. Momentum or bias actually down because you're under the 18-day average. Momentum down, but any reading under 30 is oversold, and that's where you're at in that. In the dollar index, I would look for the upper Bollinger Band, the black dashed line, to be your resistance. That number is 95.84. If we take a look, today's high was 95.84, right on the head, and the market stopped against it. Overbought in an uptrend, but hit its target, and I think pros were taking money off the table today. In the eurocurrency, the market is trying to reestablish a downtrend in an oversold condition. It doesn't have a trend right now. It's got the higher high and lower low. I'll argue that the resistance is that line in the sand, that 18-day average, that when a market's under it, the first challenge of it is often a failure number. If the market's over it, it tries to pull back and it stalls. You'll see that over and over. Does it always do it? No. Nothing always does it. But you're looking for probabilities that aren't 50%. You're looking for high probabilities to be able to say things like that. And just take a look. You got up, you came back to those numbers, you fought it. You were down here, you got up to the numbers, you fought it for a little. Doesn't have to hang there long, but it gives you an idea of where the market might go to get its footing. In the British pound, big problems for Miss May, and that's weighing on the market and the European Union. Will she stay in power? Some people think that could end up with a vote of confidence call this week. In the meantime, the trend is lower. Lower high, lower low. Near-term objective, the lower Bollinger Band in an oversold condition. I'm looking for the pros to do some covering of shorts and try to put them back out on rallies. And again, you seem to just be caught in this bigger, broad sideways action. Japanese yen, if the market were to close under 88.96, and it's finishing off right now at 89.01.5, but if that would happen, I'd call the trend down. You already have the momentum down. That would give you the bias down, and you already have the pattern of lower highs, lower lows. It hasn't occurred yet, so it's not there. It's a nothing chart right now. In Bitcoin, I still see the lower highs, lower lows. I'm bearish. It's under the 18-day average, downside bias. It's lacking bearish momentum. It's gone flat. And I did a TikTok show, and I'm talking that the market has gone flat. And what else am I saying in my show? I mentioned that the trading ranges have narrowed in dramatically. You know, we used to go $500 to $1,000 a day in dollar figures almost every day. That's gone. This market's going sideways. Admittedly, I'm into the November contract. October is still the lead month, the most popular, but a lot of people already begin moving their positions. In the Brent versus WTI crude oil, and this is the closes only, still favoring Brent. You realize we've got the Iranian situation on November 4th. That's when the oil cutoff is supposed to occur. Today we heard from the Saudis that they can produce immediately another 300,000 barrels a day and get themselves up to 11 million barrels a day in production, and they'd have capacity for another million immediately if needed. And what the market's done is just having a day where it tried to break lower on the news, came back, oversold condition, but in a downtrend. WTI hit the Bollinger Bands, and that's where I think the pros came out. Now the question is, do we embed the stochastics? I want you to look, both numbers under 20, both under 20, not under 20 on Friday. You just have an oversold condition. If you were to take out 69.90, I would think that you've probably gone from your upper band to your lower and you're ready to get another bounce. Tomorrow's going to be an important day. Gasoline, checking out its double bottom here. Momentum, as you can see, embedded to the bear side. We're looking to see what the API numbers are tomorrow and the EIA numbers, but when we look at these numbers, you can see the difference. You have your embedded reading. You got day 1 on Thursday, 2 on Friday, both numbers under 20, and today. Lose that reading, and I think prices not up here. I think that the 100-day average will become the immediate reaction number. In nat gas, we've had a heck of a run that went up, and if you'll notice, made a double top almost up in this area and is now pulled back. It's a market that's void of trend. The momentum down, the bias down. I think the bulls just bailed on this market, and we're going to wait and see what happens. Could it be that the El Nino weather forecast from the NOAA is what's doing it? It's possible. And, you know, we're due to get a milder winter according to now the new weather forecast, so it weighed on it a bit. But it's only October 22nd. We don't have snow. We don't have all that to yet worry about. I want to remind you, I'm having my live webinar this coming Thursday. So that's October 25th at 1 p.m. Central Daylight Time. I've already sent out the invite. Look in your mailbox. If you don't have it, the only way to get it is to call my staff. It means we don't have you in our mailing list. 866-973-2077. They can get it to you. It's free. I hope you bring your questions. It starts at 1 p.m., finishes no later than 1:45 p.m., as I have TV to do right after that. I have to go to the trading floor. You have a good day. I'm Ira Epstein.